Stock market crash 2024.
Traders may want to put on their hard hats and see the Dow Jones Industrial Average is down over 1,000 points at the open.
Amid fears the US economy could be heading for recession.
In this video, we will break down the recent stock market correction and what it means for your investments. If you're feeling anxious about your portfolio, don't worry. We will provide you essential strategies and actionable steps you need to take right now to safeguard your assets and position yourself for future growth. The recent market correction has been very, very stressful for many people. And in my opinion, the media doesn't help. Tokyo in Japan, the Topix index plummeted 12.2% on Monday, wiping out its entire gains for the year, and it was the sharpest sell-off since Black Monday, October 1987. That's the negative stuff. The positive thing is the following day, the index did rebound nearly 9%, but it's still well short of its all-time highs. As Warren Buffett once said in 2008, following the crash and the correction then, I didn't lose any money. Why did he not lose any money? Because he didn't sell. And that's the key thing here. You only lose money when you sell. And that's one of the key things you have to realize, is that the noise make you panic, and the anxiety may make you make decisions that are based on emotions and not factual information. You only crystallize that position once you've sold that stock or that investment. So therefore, don't panic and don't sell. Make sure to subscribe for more financial tips and analysis in the future. And let's look at where did it all start and how did it happen so quickly? Well, three things happened, and it started with the earnings announcements, the US jobs data, and then the carry trade between the USA and the yen. Wow. The recent earnings season saw big tech stocks struggle, despite the driving force behind much of Wall Street's gains this year. As they failed to meet the lofty expectations of investors, it then started a global sell-off in the Magnificent Seven. And that isn't the movie, by the way.
Awful lot of deputies for such a small place, ain't it?
It is those stocks that saw around 1 trillion of value erased. And it's your Alphabet, your Amazon, your Apple, your Meta, your Microsoft, your Nvidia and Tesla in just 2 days. $1 trillion in value. Yes, value was lost, but it only would have been truly lost if you sold. If you didn't sell, you still own that stock. Many people are saying that the correction needed is in stock markets, not the US economy, highlighting the clear market bubble due to a heavy reliance on a handful of highly valued stocks. For many, the bubble was clear to see, and one of the most significant impacts on this correction has been on the individual investments. Investors have seen their retirement accounts and other investments plummet in value. Yes, value, not losses, leaving them worried about their financial security. The corrections also led to a surge in market volatility, making it challenging for investors to make informed decisions about their investments. The start of it was the jobs data, which was not as expected in the USA, that put the markets into a little bit of a tailspin. Then the carry trade between the Japanese currency and the US dollar unwound. A carry trade is a trading strategy that involves borrowing at a lower rate and investing in an asset that provides a higher rate of return, typically based on borrowing a low interest rate currency like the yen and converting the borrowed amount into another currency like the US dollar. Huge institutional and hedge fund investors were borrowing billions and billions of dollars in the yen currency at a low to no interest rate and investing in USA stocks and treasuries. They were picking up the yield differential between yen and investing in dollars, and this is what started to unwind dramatically on Monday in Japan. That's what caused the final nail in the coffin and the ripple effect during the past week. But as I said earlier, it's only a loss when you sell, so don't sell. As we navigate this challenging landscape, it's essential to understand the importance of risk management when investing. Diversification is key, and it's crucial to spread your investments across different asset classes to minimize losses. And as I mentioned earlier, a loss is only a loss when you sell. And many other amazing investors like Warren Buffett and others have said in the past, I've not lost any money in this correction because I haven't sold. And that's the key thing to remember. Don't panic and sell. You're investing for the longer term, 1, 2, 3, 10 years, and we won't remember this week in times to come. It's also very important and vital to review your overall investment portfolio and rebalance it to ensure that the goals you originally set up remain those same goals. We work with a number of private banks, asset and wealth managers and IFAs that we can introduce you to do a completely independent review of how your money is being managed if it's not being managed or performing in line with your expectations. In the midst of this chaos, there are potential investment opportunities. Many savvy investors would have price points where they would have bought on this correction. Even when the markets are crashing or correcting, other clients would have taken this opportunity to buy. Some possibly would have sold, and in many cases, billions and billions of pounds with machines and algorithms and hedge funds and institutional companies would have been forced sellers. If you're an individual, you're not a forced seller if you're investing for the longer term. Some would have sought dividend-paying stocks that can provide a relatively stable source of income even in a declining market. Additionally, index funds and ETFs can offer a low-cost way to invest in the market, reducing your exposure to individual stocks. However, it's essential to approach these opportunities with caution. It's critical to do your research, set clear financial goals and review them. Avoid making emotional decisions based on short-term market fluctuations. Remember, investing is a long-term game, and it's crucial to maintain a disciplined approach to achieve your long-term financial objectives. For me, this is one of the most important things to remember. It's your long-term financial plans. 1 day's trading, 2-3 days of volatility, highs and lows. It's important not to forget your longer-term goals, and always don't panic and don't sell. The most critical insight I want to share is that basically a correction is only a temporary setback, and also it's a wake-up call to reassess your investment strategies. Take this opportunity to take control of your finance, re-educate yourself and rebalance your portfolios. Make informed decisions and future plans, and review them either quarterly, half-yearly or annually. Don't wait for the market to recover. Take action if you feel severely under pressure, but the key thing is not to panic and not to take hasty decisions. If you are concerned and you are worried about your financial future with your investments, then please speak to a professional advisor. Don't make uninformed and rushed decisions. In a correction like this, it's very easy to get caught up in the emotions of fear and panic, but it's essential to stay calm, informed and focused on your longer-term objectives. Remember, the stock market has always been subject to fluctuations, and it will recover in time as it has done in the past. The key is to be prepared, be proactive, and take control of your investments with your professional advisors. I'm hoping the hints and tips and strategies here we've discussed today are designed to help you navigate the stock market correction of 2024. From risk management to diversification, and from dividend-paying stocks to index funds, there are various steps which can help to protect your investments and secure your financial future. When the markets have corrected, there will always be buying opportunities. And when you see a 12% drop in one single day, if you're brave enough and you're sat in cash and you're buying, then that's fantastic. But it's very, very difficult to call a high and a low in a market. And remember, knowledge and information is power, and it's up for you to speak with your professional advisors that are there to help you through these difficult, anxious moments, but they will pass. It's only short-term volatility. If you've been affected by the stock market correction, I'd love to hear from you in the comments below. Share your experiences, your concerns, and the things that you do that have helped you navigate challenging moments. And if you're new here, consider subscribing for more tips and guidance and insights to help you achieve your investment goals. And always like and subscribe. It helps the channel enormously.